Will Joe Biden save the stock market? It really. Look at this thing, man. There's this. I'm in South Africa. Probably can't. Yeah, that was right into the sun. Probably can't see anything. Sorry about that. There's just this crazy bird with a huge beak, like sitting up here on the on the antenna. It's like crazy dinosaur looking South African bird screaming at me. So, so Joe Biden stock market presidential election. This is Brian Lewis with MMT Investing, and things just changed. So I saw, people are talking about, is Bernie Sanders or Joe Biden? Like, is Biden going to be better for the stock market than Bernie Sanders? And um, I mean, it really doesn't matter, like in general, who the president is with regards to the stock market. It just doesn't work that way. So, I mean, Joe Biden definitely smashes that like button right now to help me out with the YouTube algorithm. But it looks like Biden probably would be the candidate at this point, and I just wanted to take a look at the actual cycles that we have set up and the credit contraction model for what the stock market's going to be doing over that whole period and what's going to look like around election time. Because I was thinking that this stock market crash would be really bad for Trump's campaign and just a general idea. But I actually was looking up the times, the campaign and the election times, and looking up the cycle times relative to the election today. And here's what it's going to look like. It's going to look crazy. So this is not investment or political advice or whatever. But what it looks like is we have about a month and a half more of our credit contraction down cycle. So the stock market crash will continue until June. And then it looks like we're going to have a growth expansion phase after that stock market bottom for 3 or 4 months, like September, October kind of area will be like the top of a longer term bull trap that sets up a longer term bear market. And we'll see probably the next week or 2 weeks if we set up a bear market or not. But right now, it looks like we're going to break the bottom resistance level right now and back test it and set up a longer term bear market. If we bounce off the resistance level, then we'll still break it at the end of the cycle, but that would not be a bear indicator. But right now, it looks like a longer term bear market, not just from the cycles, from everything. But what that would look like is we get a crash now, and then we get a long expansion, like 3 or 4 month expansion leading up to the presidential election where everything looks good. The stock market will look good, and it's a huge bull trap. Everyone's going to be really happy about it. And then probably be coming out of lockdown, and it's going to be like a really good environment, like a month before the election. And then the election's right at the beginning of November. So there's probably like a 3-week period right there where we switch from expansion to like a stagflation environment where there is still positive monetary expansion, but then growth starts going negative. So what that cycle looks like in the stock market is you get that kind of upwards pop at the beginning of the cycle because of the expansion, and then it starts falling towards the end of that cycle for the next couple of months because of the down growth, especially in a bear market. So I think that we are going to get the expansion phase, and then we're going to get the pop on the stagflation expansion. We're going to have 2 expansion phases in a row that run right into the presidential election. It's going to be like a buzzy top of a big bull trap right on the election. And I don't think that's going to be bad for Trump's campaign. And I think Trump can just blame the crash on the whole health situation. This is the quietest neighborhood, and it's just everything goes crazy as soon as I start recording. So I don't even remember what I was just saying. We just get a long expansion. We get two expansion cycles in a row, and the first one is going to be a growth expansion. The second one is going to be negative growth expansion. But you'll get the whole growth expansion, and then you'll get the monetary expansion like pop before the down growth kicks in, and it should be like right around the top of the bull trap. Should be like right when the election is happening, and that sets up the environment where Trump could just blame the crash on the health situation and blame the crash on the Fed. And yeah, that's the environment that I see around election time. And I think it's going to be Bernie versus Trump. And last week I was just like, I don't think Trump can win with these conditions. And I think Trump is probably going to win in those conditions. I think Trump would win in those conditions, and then right after he's elected, then we start getting the down growth in the bear market, and it just starts going down. And it has nothing to do with who the president is, and it's not even the Fed. Like, it's just a cyclical thing that has to do with the expansion of the monetary system. And what I think happened just now is the US dollar, say like in the Great Depression, from the start of the Fed to the Great Depression, that was the expansion of how far the dollar could expand across America with a gold-backed dollar. And then we hit the max expansion, and then we had the wind down. That was the Great Depression. And then we started switching to America as the world reserve currency. And then we had that expansion across the entire world. And this is not gold-backed. This is a floating exchange kind of currency, but it's sort of started out gold-backed, sort of. They just kept going until it didn't make sense. But now we have hit this max expansion across the whole world, and now it just needs to wind back down, just like it did the last time. So it's a deflationary outlook for several years, 3 or 4 years, a bear market, and it's just kind of an unwinding of that expansion of the world currency system across the whole world. It kind of hit the wall, and the election is going to happen right on a massive bull trap where everybody is in super positive state of mind with regards to the economy. And that's what I think is going to be happening around the election. So you heard it here first. I'm calling it. Trump is going to win, and the stock market's going to look amazing. And that bird, the bird is gonna, I don't know. Yeah, and then after that, we start the bear market, and then it just doesn't have anything to do with the president. So the president doesn't decide the monetary expansion. The Fed does not even decide the monetary expansion. The Fed just reacts to it and tries to stabilize it. And then the whole business sector and all of the spending, that's not decided by the businesses. Like, that's decided by how much money, how many loans they have available. And the whole business sector is pro-cyclical. And that's why you can get a mathematical model of the stock market that is cyclical and has these patterns. And those patterns are just like mathematical derivatives of the expansion of the currency. And the whole government is just reacting to that. And the whole business sector is just subject to that. So that's the model that I have and what I think is going to be going on. I hope that is interesting, and that's what I think is going to happen. Yeah, just looking at it today. Unless we bounce off that lower resistance level and it does not set up a long-term bear market. But right now, that's what it looks like. We're setting up another bull trap and another long-term bear market. So yeah, please hit the like button, and this is not investment advice or election advice. I don't care who you vote for, and I don't think it's going to affect the stock market. And cheers.